Hello and welcome to BQ Prime. You're watching Earnings with BQ, and my guest today is from Tata Power, Dr. Praveer Sinha, who is the Managing Director and CEO of the company. Dr. Sinha, thank you very much for joining us on BQ Prime. Good set of operating numbers there. Uh, can you elaborate how the operational performance has been and which were the contributors to it?
So, first of all, thank you, Sajid, and happy Diwali to you and to all your viewers.
Same to you, sir.
This quarter has been a good quarter. Our core business has actually given us 84% of our profit, which is something a little different than what it was last year. Last year, a lot of profit came from the coal mines, which is a non-core business. And what it also demonstrates is that our existing businesses, whatever we are doing, whether it is our generation business, our whether hydro or coal-based plants, or our transmission distribution business, including Odisha, and our renewable business, our utility scale uh, business, our group captive, our rooftop solar, all of them are doing very good. And with better renewable capacity coming up, especially the manufacturing plant, the 4.3 gigawatt, which will be a single largest solar cell and module plant in the country. I think our performance will only further get improved, and our core operations and core results will give more of our profitability. So I think it's a good trend that has started. And mind you, this is our 16th quarter in which we have consecutive quarter in which we have shown growth in profit. So every quarter we keep on improving, and the benefit of it one can see in terms of better performance.
That's right, sir. Can you give us an update on Mundra, because your capacity or plant load has been 60 to 70% in that. What's the update from the Section 11 point of view? Till when can has it been extended for by another year or so?
From the Mundra plant has been operating. One of the units is down because there is a problem with one of the transformers, which has gone for repair. That is why you do not see 90-95% availability. Otherwise, it would have been in that range. So it's only 4 units that are operating, and all the 4 are operating at full capacity. And Section 11 ensures that the tariff is cost reflective. And this, of course, has been extended up to next year, June. And we do expect that with the demand increasing, the operation of this plant will be required. It is one of the still most efficient and economical plant, and is in the merit order. So I am very sure that with the increased demand, these plants will continue to operate, and we will continue to serve our customer with these things.
Sir, when do you expect the fifth unit to come back on operations here?
The 5th unit will be back in March. So the repair of the transformer is going on in BHEL, and we expect the unit to come back by February.
It's been a good quarter from a renewable point of view as well. Your capex has been good, especially the captive side has been very good. What kind of order book are you sitting there, and how do you and what kind of execution you expect in the next 1 or 2 quarters or next half of the year?
So we are sitting on nearly 3.7 gigawatt of renewable order, and many of them are now under execution. So you will see huge increase in execution of these projects in Q3 and Q4, and because nearly 1.5 gigawatt will get completed in next 2 quarters. So the benefit of lower prices of modules we will take. And I think in next 1 year, we will do nearly 2.5 gigawatt of solar, the solar plants. So I think we are sitting in a good opportunity to encash on the lower prices and execute all these projects within the time frame.
Sir, I read in I think in your investor presentation that you had to cancel orders worth some 1,000 odd crores because of cost economics. How is that? I mean, so what can you give us some idea of why it went off economics?
So some of the projects which we were doing with third party EPC, we could not execute because the client could not offer us the land. And those projects were little old projects, so it was not making sense for us to execute. So we mutually discussed and got the projects cancelled. And that's what has been reported. But other than that, all the other plants we are executing and will complete as per the contractual requirement.
With respect to the fact that your cell and module and polysilicon and wafer prices have fallen, and it has helped you to if do a faster execution. How will it what kind of execution capable we can see in the next two quarters or so, because you have a March 31st deadline also coming in, right?
So we have planned a lot of projects to be completed in next 2 quarters. As you rightly mentioned, the prices of modules have come down, and taking that benefit, we will execute nearly 1.5 gigawatt of projects in next 2 quarters. And we are all geared up for that. Everything has been ordered, and the work at site is going on at full swing. And we do expect that in next 2 quarters, we will see a huge increase in the EPC business of ours.
You mentioned briefly in the beginning of the of our conversation about that coal prices have cooled off. Uh, how do you see Australian and South African coal prices? Do you see the prices to be range bound from here on, or do you see some spike coming in going forward as well?
So we had seen last year was an outlier where the coal prices went up because of the international uh, shortage of coal because of the war. But now the coal prices have stabilized, and I expect that it will be range bound. It is not going to increase at least for next few months. So we are confident that this price range, the cost of imported coal generation will be very, very reasonable, and we will be able to give within the merit order to all our consumers.
Hmm. Uh, I wanted to discuss with you your 4.3 gigawatt solar cell project which is there. Are we on stream to go commercial by the end of this fiscal?
Yes, we are expected that within this financial year, we will stabilize the operation of both our module unit, where we already have started the trial production, and also of our cell plant, where we will start the production in January onwards. So we are very much on track, and we'll be able to complete and stabilize the operation with this financial year.
Sir, can you give us some guidance about the capex that you expect in the second half of the year? Because you have done capex of 2,200 odd crores in Q2. For the next rest half of the year, what is the kind of capex lined up?
So we had earlier planned a capex of nearly 12,500 crores, and we will be able to not only meet that, but maybe cross that to meet our year-end objective.
Hmm. Finally, sir, your net debt has come down in at the end of second quarter. Will this deleveraging process continue in this year, in the rest of the year as well? Means what kind of net debt levels are you looking at by the end of March?
So as I mentioned to you, we are doing large amount of capex also. So, but what is important is that you see the two metrics, which is with our debt equity, which we are at nearly one, and which is a very, very healthy debt equity and gives us the freedom to do little more of capex. The
Uh,
second is our debt EBITDA also is very good. It's at 2.67, and again, very low for the infrastructure company. So we definitely have opportunity to put some more money and start getting returns on them. So I think we are in good shape as far as our financial metrics is concerned, and we will be again range bound in all these metrics, so that it while it will increase the debt, it will also generate that much more higher EBITDA to take care of the higher debt.
mhm.
The loan.
Sir, by the end of this fiscal, how much more of the renewable projects will come on stream for you? I'm talking from a generation point of view.
We should be touching about 5,000 megawatt. Right now, we are 4,200. We'll be touching 5,000.
Hmm. And finally, sir, I just want an industry question. 13% growth on demand in Q2, that's what we saw. Do you see demand to sustain in digits in the second half of the year as well?
Normally, the demand during the winter months is much less, especially from November to February. But having said that, we have seen in last 2 years, the demand has gone up by 10% each year. And I do expect that this year also the demand on an average basis for the full year would be about 10%. So the demand will be there and it will continue even in the next fiscal.
Will elections will have any impact on the demand part of it?
I think that the demand is today driven more by the economic activity, which is at all-time high. We do expect our industrial and commercial establishments to do very well. And similarly, our residential consumers are also doing a large uh, amount of energy consumption. So we do expect that our demand will continue in the coming quarters.
Mr. Dr. Sinha, it was a pleasure talking to you today on BK Prime. Thank you very much for joining us and giving us an update on your earnings. Thank you for joining us on BK Prime.
Thank you, Asad.